Hey there, my name is Fabio and welcome back to another video here on the channel in which I'm going to be explaining exactly how you can enter the market using supply and demand, market structure, liquidity, premium versus discount, and more specifically, fractal structure. I'm going to explain my entire entry model from A to Z so that you can trade in the exact same way that I do every single day. Now, at the end of this video, if you still have any questions, make sure to click on the link in the description down below, book in a free call. I'm there to help. Now, without further ado, let's just dive straight in. The very first thing that I want you to do when going onto any chart at all is just simply drawing out your overall market structure. So what I have here is a swing high, what I have over here is a swing low, and what we have over here is the overall break of structure high. Now, before I go into detail explaining exactly how you can enter the market using fractal structure, we need to understand overall what the confluences are that we need to use in order to come to the conclusion that we can actually enter using fractal structure, which is my mechanical entry model, which I use every single day. Okay, so before you understand that, look at these four confluences. So the very first thing that I always look at is market structure, right? So what we have here is that we have the overall impulse up, we have the retracement, we have another impulse up, we have a retracement down, and now obviously we're expecting another impulse in towards the upside to create a new higher high. Now this is the very first form of market structure that I personally use. Okay, so this is swing structure, and with swing structure all you simply do is you just look at the highest and the lowest swing points which broke market structure. So over here we have a break of structure. This is then not going to be, let's say, your high or low. No, this over here is going to be your low. This over here is going to be your high. This is the overall impulse in towards the upside, and all the trend that you have internally is just simply your internal trend facilitating the overall impulse in towards the upside. So don't confuse this low for this low, just always use the lowest point which broke market structure. So in this example, again, we are bullish and we're now looking for the continuation in towards the upside. However, how do you understand that the overall continuation in towards the upside is ready to take place? Well, we use the other confluences, which are liquidity, supply and demand, and of course, premium versus discount. So premium versus discount is the second confluence that I use, and that is very simply said, just the Fibonacci retracement tool, where I use the 0.5 fib as my minimum requirement to classify a retracement. So this example, what you see happening is that the market retraces in towards that 0.5 fib or even below it, and then reverses in towards the upside, hinting that the overall pullback may have now taken place and we're ready to form a new impulsive phase where we create a new higher high. Next to that, obviously we want to identify liquidity, and liquidity is very simply said either a swing low, as we have for example over here, or we look for range liquidity. Now in this particular example, we don't have a area of consolidation, we don't have a range, but we do have an overall swing low from where we saw a V-shaped reversal in towards the upside. Therefore, understand that there is liquidity underneath that low, and I classify that as a liquidity low. So what you can see here is that we grab liquidity underneath that low, and straight away again the market reverses with a V-shaped reaction in towards the upside. Now this is where fractal structure comes into play, because how do you understand that this was a liquidity low, and how do you understand that the market is now ready to enter its new and next impulsive phase? Well, very simply said, we utilize fractal structure. A fractal structure is nothing more than the structure on individual candlesticks. So when we look at individual candlesticks like we had, let's say for example over here within this overall blue box, we're just going to draw out the overall fractal structure for you. Now what we can see in, let me just delete the Fibonacci retracement tool. What we see in this particular phase over here is that we get the impulse down, we get the retracement, and then we get another impulse down. Now this for me is a fractal low break over here on this candlestick's low. Therefore, this then becomes my overall fractal high. Why is this the fractal low and the fractal high? Well, you see the impulse down in towards that low, you see a retracement, you see another impulse down, breaking that previous low, and then you see a bullish fractal break once again take place. You see the retracement, impulse, retracement, and then another impulse in towards the highs. Now, very simply said, again, just drawing that in with the overall lines, what we have over here is the fractal high break. This then over here becomes your fractal low, and then once again over here we have the fractal high break. This then becomes overall your fractal low, then again we have the fractal high break, then again this over here becomes your fractal low. So why is this going to be my fractal low? Well, this is the most recent low over here that broke this high. Therefore, you do not take this low over here, no, you take this low over here. And why is this your most recent low? What is the most recent low? Because it is the most recent low that is formed that broke the highs. Okay, so what you need to understand is that it is a low because here it failed to break this high over here. Therefore, you classify this as a pullback, and then you see another impulse in towards the highs. That's why I call this my most recent low. So then what you see is that we get the overall impulse in towards the downside, we get another retracement up, and then we get another impulse in towards the downside. Fractal low break, and then once again here, we now have a fractal high break. So this fractal high break over here takes place after grabbing liquidity and after seeing a retracement in towards that 0.5 Fibonacci retracement level. So overall, we've now seen the PVD, the premium versus discount, also known as 0.5 Fib, being hit. We've seen liquidity get grabbed. Overall, we have bullish structure, both swing and now fractal, and we also have an area of demand. Now, what is our area of demand? Our area of demand is over here, the imbalance over here. So these two imbalance candles are going to be my area of demand. And as you can see, as soon as we tap in towards them, we get that V-shaped reversal back out of them. Now, in order for you to take a trade, we're going to drop down in towards the daily and the 4-hour time frame, because this was all just analysis on the weekly. Now, what we see here on the daily time frame is once again the fractal structure do its thing. As soon as we come in towards that weekly area of demand, over here again we see a daily fractal structure break. And why is this a daily fractal structure break? Well, again, we see the push down, we see the retracement, we see the push down, and then again we see a break in towards the upside. So this moment in time, I'm now happy to look for a potential long again. And as you can see, we've also already tapped in towards the overall sell before the buy, which is my demand zone. Sell before a strong buy up, market taps in, moves straight back out again. So overall, the daily fractal structure is bullish as well, and as long as this low over here holds, we are still only interested in looking for buys. Again, all I simply do is I look at the weekly time frame. Okay, weekly time frame is bullish, we've grabbed liquidity, weekly came in towards the demand zone, and the weekly fractal is bullish as well. I drop down in towards the daily time frame, I can see that the daily is bullish as well. If you look over here, you see the downtrend, then you see the bullish break up, you see the retracement down, and now after seeing a daily fractal structure break, the market should be ready to continue up higher once again. So looking here at the daily and the weekly, we understand that everything is bullish. Both fractal and both swing structure are bullish on the weekly and the daily time frame. Now I drop down in towards the 4-hour time frame and I look for my entry model. Now the entry model is very simple, guys. All you are going to look for once again is, okay, are the swing structure and the fractal structure in alignment? So what we had here was a break of structure in towards the downside, and here we had a break of structure in towards the upside after breaking this high over here. So what we had was the push down, retracement, push down. Then here we had some form of a retracement. It failed to continue down lower. It broke market structure with a candle close above that previous swing high. And then what you see happening, the market retraces back down in towards your area of demand in both instances. And your area of demand is nothing more than the overall sell before the strong buy up, which once again broke fractal structure. Now in these two examples with these two demand zones, you can both, or in both examples, see that the overall fractal structure remains bullish. If we just remove all of the lines and we keep it super clean and we just press the replay mode, what you're going to be able to see is that this over here is my fractal high, and the fractal high gets broken. At this point in time, this becomes my area of demand over here, or you could even refine it to this level over here. And from that point onwards, you're actually already happy to look for that potential long position. Now, as I mentioned, preferably you want the 4-hour swing structure to be in alignment, so it's more high probability if you wait for that high over here to break. So let's wait for that to break. Okay, the high breaks, you see a candle close above it, indicating to me that we are now definitely bullish. This is now my area of 4-hour demand, this sell before the buy, and it is also my 4-hour fractal low. So as long as this low is respected, we should continue moving up higher. Now remember, everything is in alignment. The weekly both swing and fractal structure, the daily both swing and fractal structure, and now also the 4-hour swing and fractal structure. So I continue to look for a long position as long as the 4-hour fractal low over here is respected. Now what you see happening is that the market taps in towards that level, in towards that demand zone. It respects the fractal low with precision, and from there we continue moving up higher once again. Now once again, this is the fractal high that got broken, because this over here is the push up, the retracement, again the push up. Now your protected fractal low is the low of that bullish candle, and as long as that low is respected, we should continue moving up higher. Now again, the sell before the buy becomes your area of demand, and once again I'm now happy to look for a long position once we retrace in towards that demand zone with my stop loss underneath the lows, targeting a new higher high. Now when looking to place a target, always look to the left and look for a clean area of supply that could potentially let your trade reverse. If we look here to the left, there are no clean areas of supply. All you have are descending highs, which are indicating to me that these are just liquidity highs ready to get taken out. Now, what you see happening, again, if we zoom in, is that the market retraces in towards our entry level or in towards that demand zone. It consolidates, and then once again, it continues up higher. And what will happen is that we'll just simply continue up higher, grab all of the liquidity here to the left and hit RTP, forming a new higher high on the daily time frame as we expected. So as you can see over here, the daily fractal structure continues to get respected every single time. And this is the power of fractal structure and of my overall analysis. Here we have the daily fractal high break. Here we have the daily fractal high break. And as long now as this low over here is respected, we should continue moving up higher. Now, again, as you can see over here, the daily fractal high got broken. And now this over here is your daily fractal low. As long as this low is respected, I am happy to continue to look for longs. Now, that's pretty much everything broken down for you here in this short video. If you have any questions, make sure to click on the link down below. I am there to help. Book in a free call, and I hope to see you there. Have an amazing day. Hope you enjoyed this video. Make sure to leave a thumbs up and a comment if you have any questions. Thanks, and have a great day.